Welcome, ladies and gentlemen, to the Precious Metal Summit Zurich virtual with Commodity TV. And now we want to talk to Impact Silver, and Jerry Huang, the CFO, is here with us. Hey, good day to Canada. Jerry, how are you doing?
Hey, good morning to you. What can I say? Thanks again for the invite. Always a pleasure meeting you.
Yeah, pleasure meeting you, even at 3 o'clock in the night. Appreciate it that you got up that early for us here. Impact Silver, you guys are since 15 years in production. So how was the year so far for you?
Definitely a great year, Wakan. The Silver Squeeze, first part of the year, really brought the general public to the silver business. Traditionally, it's obviously a much more smaller market compared to gold and even some of the base metal. It's definitely known as a bit of a niche market. The silver bugs, as you know it, they're very passionate, but again, it's a much smaller community versus the much broader side of gold. Silver is often known as the poor man's gold, so to speak. We obviously believe that at Impact, obviously silver is undervalued. There's a lot more interest in terms of solar cells, green economy, EV, electric cars, and these are all new demands coming to the silver market. So we had a really good start to the year. Silver prices are good, as our investors and some new investors looking at Impact Silver will know we're not just a pure explorer. We have silver in the ground, and also we produce. We've been in production for a while now.
Yeah, exactly.
So it's been a great year.
Super. Since 15 years you are producing. I saw in your presentation that by Q2 you produced 307,000 ounces. So how is the second half of the year now going so far?
Yeah, great. So last year when we had an interview with you, it was largely the same production profile because of COVID, right? We shut down actually the capacity down to about 75-80% of full capacity at the Guadalupe. Obviously, for the last year, 12 months, things have actually not really changed too much because of supply crunch, supply chain issues, shipping delays, and obviously protocols for COVID, as we all know. And everything has obviously even gone further in terms of prices and inflation. So we believe that gold and silver should only continue to go higher because literally everything that we talked about last year, gold, silver, oil prices, lumber, labor has all gone back up now that the world is starting to reopen a bit past COVID. So for this year, we do expect the latter half of the year to continue to be small increments increasing in terms of our production size. Next year, we should continue to see more incremental material increases for both organically and maybe on the M&A side. We've also, of course, since the last time we talked, initiated a very aggressive drill campaign for over 20,000 meters. We've added a fourth drill rig internally because drilling, just like labor, has been very, very hard to get, right? Everything is backed up. I'm sure you hear at this conference everyone is backed up at the assay labs, at the drilling lineups for new drill rigs. It's the same thing that we can see worldwide for any services or goods right now. Supply chain is a big issue. So we've added that internally to obviously speed up and lower our costs. One of our costs of drilling per meter, one of the lowest in the industry. But between myself and our CEO Fred, we had extensive experience with a company called Energold, which had over 40 drill rigs in Mexico.
Okay, super. Yeah, so also you had in October, you published already some very good drill results, like on 5th October, almost 700 grams silver per 1.3 meter. And then you had like over 3 meters with 2,186 grams silver.
Correct.
So that is really beautiful. Despite that, the question what I would like to ask is, if I look at your production profile, 2016, you had a peak of 953,000 ounces, and then it went slowly down. What was the reason for that?
Sure, that's a great question, Wakan. So the rationale behind that is rather than focusing on just pure ounces, we actually focus on profits and cash flow, right? So we are a production story. The great thing with Impact is that we're in an area that's seen production for 500 plus years, right? Our facility it's beautiful. It's fairly large for a small cap miner like us because it was actually built by the majors. It was built by Pinellas 100 plus years ago. There's over 52 mills on the site. There's 5,000 targets we identified. So we are really just scratching the surface. We have a centralized mill on the north, and then we have a BMS mill on the bottom, which could be a near-term expansion potential for us. But in terms of why the production profile drop, as you mentioned, is we focus on profitability. And if you recall, from 2015 to 2018, silver prices were very challenging, right? Our marginal cost of production has hovered around the 16.5 to 17.5 per ounce US dollars. And during that time, 2015 to 2019, silver at one point was dropping to $11, $12 an ounce. So we were really focusing on making sure every ounce was as low cost as possible, rather than just getting to 1 million ounces or 950,000. Back in the early days, in 2010, 2012, companies were getting a premium for getting to multi-million or over 1 million ounces. You get a better market cap, better valuation. So in a tougher market, we scaled back, knowing that, hey, so we believe silver prices will be a lot higher in the future. Why don't we wait until the silver prices are much better to basically do a deal and sell silver to the Trafigura or the Samsung or the Glencore of the world?
Super. So your costs today, if I got that correct, is around $11, $12.
Our cost per ounce is a marginal cost, all in, it's about $17.
17, okay, but you still make money. That's important.
We are making money. Silver is obviously above $24, $25 US an ounce. It does fluctuate quite often, but obviously we maintain our cost profile very disciplined over the last 4 or 5 years, especially in the lower market. So when the silver prices go up, our costs do not change, and that's a beautiful thing with any sort of a silver mining or a silver opportunity, is that we are a huge optionality play, and that's why you can see silver in terms of silver returns versus our impact shares returns. We give you a 3 to 10 times leverage anytime silver moves up. We are 95% pure silver. For revenue, we don't report any equivalents.
Okay, as you said, you are a optionality play. So where are your optionalities in addition to your producing Guadalupe mine?
Yeah, excellent question. So as you mentioned earlier, our recent drill result at the Pachuqueño, at the Guadalupe area, these are areas right around our northwestern mill, which is running at 400 tons per day. We can ramp that up to the 540 pre-pandemic levels, full capacity. So that should get us another 20% jump on our current production profile, bringing us to close to that 900,000 ounces. In terms of where we can see further growth, that's exactly what we can see in terms of some of these production and exploration opportunities. The Pachuqueño are brand new veins. The San Ramon is an area we produced for the last 8 years. Only recently did with higher silver prices, additional increase in cash flow, give us that flexibility to be able to drill. We're sitting on 22 million cash, with no debt. That's nearly a third or even a quarter of our market cap, depending on how the market is fluctuating our share price. So we have definitely a very sizable war chest to go out for exploration, acquisitions, deal making, and whatnot. And some of these veins essentially are just confirmations of these 5,000 plus workings that people have used to be mining with hand. So they're so high grade. We've mapped most of it in our GIS database, and we've had a stellar success track record of being able to develop, explore, bring it to cash flow, right? We've done it on 8 different instances on small mines, and we have a very unique small team that's very scalable and can move fast on these opportunities.
Fantastic. So what is the mine life today, and what do you think with all this exploration success you had so far, and the exploration you are doing, to what you can at least extend that?
Right, exactly. So, like I said, we can advance a project from exploration to development through to production within 12 to 16 months. When we drill at the Pachuqueño, it's not far away from the mill, so we have a very centralized approach. Anything we can find, we can very quickly develop to a production decision. Anything further, that could be an opportunity for further expansion. Just to add what you mentioned earlier, we do have a southern portion of our project called VMS, Capire, which is a project we started producing from in 2011. It was put on care and maintenance in 2013 due to low silver prices. So again, like as you know, in mining, 70 years is nothing, right? So these deposits took thousands of years to form. So the silver is also there. Lead and zinc is even higher price than what it was back in 2013 or 14, right? So lead is at and zinc is at a new 8-year, 9-year high. So we have a 200 tons per day pilot plant. We produce 30,000 tons. It can be right-sized. We're currently going through X-ray sorting to essentially lower the cost further, right, with the optic sorting. So this technology, Wakan, similar to the DMS we looked at earlier, these didn't exist 10 years ago, right? So these things can, again, cut our costs further, which will really allow us to expand our margin further. So these are some of the new additions, and that could potentially double our production within the next 12 to 16 months.
Okay, super. As I see in your presentation, that will be an open pit, of course. So where do you see the capex for that, and can you finance that out of existing cash flow?
Sure. Definitely. So, I mean, like I said earlier, we were last quarter, end of June, we had about 22 million in the bank and no debt. The mill is fully built, right? So it was right-sized. Could be actually more than 800,000 tons per day. It's currently at 200. It was really meant to be a small pilot plant back in 2012. So to right-size that further, we would then cut the mine life down to maybe 15, 20 years. As it is, we'll be there for 40 plus years. So with the X-ray sorting, the project tonnage would probably increase over to 300 tons per day, which would, again, to put it in perspective, we're producing at 400 tons per day at our main mill. So this would definitely add a material amount of production to our size. With that project, the capex is pretty low in terms of just the X-ray sorting. So 3-4 million comes very easily off, off 22 million. We have plenty of cash in the bank to fund that internally. We can also, I mean, if we wanted to expand it, because we're in production and we've been in production for close to 17 years. We have plenty of basically metal buyers like Samsung, Trafigura, or Glencore who would pre-buy our metal. So the only thing obviously we give up, Wakan, is we give up that we don't trade dilution, but we give up that 1 year, 2 year of material gold prices or silver prices. So silver prices go up, that during then we lose the upside, right? You know what I mean? But you trade it off in no dilution. So we can evaluate as we get closer to that capex decision. But needless to say, a lot of opportunities. We don't need to raise money if we don't have to. If the market is bad, we can still go ahead because we do have the cash. So that's a great position to be in.
That's a nice thing to have. So 2022 is quite big for you.
I think so. It's one of our best years, in terms of multiple irons in the fire. We're drilling 25,000 meters, as you saw some of the results. We're drilling at the Alacran, which is a past producer, 10 million ounce plus potential historic production. That's in a new area that we haven't looked at. There's maps from 100 years ago showing they were producing with 500 employees, at 50, 60,000 grams per ton. Right. So just to give you that idea, at 50, 100 tons per day at that kind of grade, you're producing 8-9 million ounces a year. That's the size of a Fortuna silver. That's insane, right? So we're excited to be drilling there. We finally have the time and the cash balance and even the workforce to be able to allocate that. Some of the new targets, the gold and copper targets at the Valle de Oro, which is a big insightful valley. Last time we drilled there was 2008. We were drilling 10 grams per ton over 20 meters, right? So as we go down underground lower, we traditionally mine underground, as we go down 300 meters, usually silver and lead zinc falls off, we get gold and copper. So there's a big valley that dips down 300 meters. So the Mother Nature essentially got rid of that top layer for us. And now we straight get gold and copper. So last year before COVID, we were sampling 110 grams per ton over 100-meter strike. So we are excited to be drilling there. The Alacran, San Ramon Deep is an area we've been producing since 2007. It's still part of our production profile, around 20% of our ore feed. We believe we're finding new zones to the San Ramon, right? San Ramon goes down 300 meters to put that in perspective for your European friends. The Eiffel Tower is not even 300 meters. CN Tower, right. That's how deep we've gone down. Yeah. Remove all the silver on one lens, and now we're finding multiple more zones. So they seem to be carbon copies, one after another. So that's very exciting. We have the Capire, which is a near-term doubling potential for production with the new technology that wasn't around 10 years ago, right? So, we have a production track record, we have no debt, we have $22 million in the bank, we have the ability to raise more. We've raised over 60 million non-brokered in only 7 rounds of financing the last 17 years, right? No rollback. So I think we're on target to really hit on fire on all cylinders next year.
Absolutely. Super. Jerry, thank you very much for the insight. And you just summed up everything which I normally do, but it perfectly reflects your company. Yeah, wish you all the best. Merry Christmas. Thank you very much for the interview. Bye-bye. Thank you.
Thanks so much, Mark. Always a pleasure. See you next year.
Absolutely. And then in person, hopefully. Yeah, ladies and gentlemen, that was... Yeah, sorry?
Go ahead.
Yeah.
Go ahead. Yes.
Yeah, ladies and gentlemen, that was Jerry Huang, the CFO of Impact Silver. And you heard it. I think Jerry summed it up perfectly. The company is full on track, no debt, $22 million in the bank, and they can finance out of cash flow their next open pit mine. So check out the company. Thanks for watching us, and bye-bye from Switzerland.